Good afternoon. Happy Thursday. This is Sean the Bell of the Dekker Hewett Group. We're coming to you a little bit early this week, just on the account that I'm going to be offline tomorrow. So no Market Watch Weekly on Friday. The usual edition will be coming out today on Thursday. So this week's edition just focuses a lot on the conversation that we continue to have here so far in 2022, and that being the rising rate environment that we will be seeing now in March. Probably both out of the Bank of Canada in the U.S. Federal Reserve, along with this inflationary conversation, which just continues to be a constant nag for central banks and policies. So this week's Market Watch Weekly just continues to run through some of the data that we do believe to show that it is somewhat transitory in nature. And despite all the rhetoric that you hear in the media and whatnot, you're not going to see 7 or 6 rate hikes out of either of these central banks. It's likely that they're going to be doing several different policies at once in order to sort of pull in or rein in that inflationary figures. So we don't believe you're going to see anything too aggressive on the monetary policy front. And also it's worth noting the fact that we do tend to see equities do well in these rising rate environments, or at least in the first few rate hikes. And there's a couple of interesting charts in there that just support that. And also interesting to note here, after a weak January, which we of course saw last month, equity markets tend to do very well the preceding 11 months. Only once in the last, I think, 10 series did we actually see a negative year unfold. So it's worth taking a look at the table in this week's Market Watch Weekly. So we'll end it there. Back again next week in the usual time and date. Hope everyone enjoys the weekend tomorrow. Talk to you again soon. Cheers.